About one particular company, Sanstar's 510 crore IPO has opened for subscription today. The IPO comprises of a fresh issue of 397 crores and an offer for sale of around 113 odd crores. Through the IPO proceeds, the company plans to more than double the capacity at the Dhule plant and will repay borrowings worth around 100 crores as well. To discuss more on the IPO, we have with us the two companies' joint MDs, who are also brothers, Sambhav Chaudhary and Shreyans Chaudhary, in the studio to take us through the details. And it's important to mention that it's in fact subscribed. The IPO is subscribed in the first hour itself. So tell us a little bit, before we talk about the business model, which is quite interesting, just wanted to understand the repayment of 100 crores in terms of debt out of that 510 crores that you're raising. How much do you have in terms of debt on your books right now? How much do you have in terms of cash? How much is going towards repayment? And what's the eventual goal for debt reduction?
Thank you so much, first of all, Mangalam and Ekta, for having us here. On the debt side, we have a total debt of approximately 140 crores on the books, out of which 35 is long-term, and the balancing figure would be a short-term debt. And out of the IPO proceeds, we plan to repay approximately 100 crores towards the debt repayment. And going forward in the next year, the company is going to be completely debt-free. We are generating approximately, in the last financial year, we've generated approximately 90 crores of positive cash flows in the company. And we hope to continue that as well.
All right. When I look at the business that you're doing, the third largest manufacturer of maize-based specialty products and ingredient solutions, you basically sell to a lot of the food processing agencies, etc. At the same time, you don't have any long-term contracts with the people you source your maize from. Do you have long-term contracts with your customers? Because it seems like a commoditized business where someone can come undercut the prices, etc. So in light of that, what exactly is your moat out here?
So the company is primarily driven into sales to food. Almost 60% of our revenues is coming in from sales to food, FMCG, or processed food industries. So the entry and exit barriers are very high to these industries. The company is having a very good name for itself in the overseas markets. As you can see, almost 400 crores or 36% almost total revenue coming in from exports market. A lot of new applications are coming in that seem to be driving. So there is a lot of value addition and a lot of second generation derivatives that we manufacture. So we are not very directly exposed to any volatility in terms of raw material prices. It is fairly easy for us to pass on any prices. As a company prudent policy, we do not enter into any long-term contracts. Our buyers typically come and buy on a monthly or a quarterly basis.
Okay. All right. What's interesting is that you mentioned that you export to around 49 countries and you have around 33% of your sales coming in from exports. Tell us, how is that vertical growing vis-a-vis the domestic market? And within the exports, what do you see as the key driver of growth? Within domestic markets, what is the key driver of growth?
So globally, a lot of new applications are coming up within the plant-based specialty products that we do. If you see globally on the Western Hemisphere, there is a boom towards plant-based foods, plant-based clothing, leather, shoes, etc. Even on the personal care space, we see now companies shifting to these plant-based products that we are manufacturing, rather than a talc or the more lesser friendly applications. So one is, of course, these all new applications that are driving. Plus post-COVID, we have seen a lot of interest towards our industry for India. A lot of large companies wish to set up their supply chain within India. So on an overall picture, this is all driving the demand globally.
But how much is the vertical in exports growing? How much is the vertical in domestic growing? What's the growth rate?
We were like 36% on the export number. Going ahead with the expansion and the demand that we see post doubling of the capacity that Sanstar has already started, we hope to maintain the same share. We see that kind of demand going ahead as well within the export market.
Let's talk about the capacity expansion itself. 181 crores is what you are, earmarking for capacity expansion. I look at your gross block, which has increased over the last 3 years already, and that's led to a revenue jump as well. So what are typically the asset turns that you have on a business like this? And with this near 200 crore capacity addition, what could the incremental revenue look like?
So, I mean, we've positively maintained a very nice asset turnover, probably of around 5 to 6,
Okay.
which is also one of the best in the industry per se. And with the expansion of around 200 crore rupees, out of which 20 crores have already been spent on the expansion, and out of the IPO proceeds, 180 crores would be spent on the upcoming expansion. We plan to maintain a similar asset turnover ratio or even better.
So if I have to extrapolate those numbers, last year you did revenues of close to around 1,067 crores, additional 200 crore capacity. When does that come on stream? And with this 5-6 times turnover, when do you reach that 2,000 crore mark, by 2,000, 2,200 crores?
So, I mean, we plan to complete the expansion by June 2025.
Okay.
The financial year 25-26 will have 9 months of that expansion. So, hopefully, in the 25-26, we aim to double our revenues from the existing.
Okay.
With
all
the
right.
expansion coming in, because we are doubling the capacity from 1,100 to 2,100 tons.
Okay, so these 49 countries that you're exporting to are mainly semi-regulated countries?
In our products, because these products we need on a very daily basis, there's not much regulations. We don't see any import restrictions or even for say export restrictions. So we don't see any regulations within our space for these.
Is there
Okay,
a
so
risk?
it's easy. Just what about the developed countries? Say, for example, US, Europe, your exposure to, say, countries such as that, as well as maybe Australia, because regulatory, barriers would probably be more there.
Yeah, so because of the demand avenues that we and that because our plants are very proficient in terms of producing a very high quality, the plants are automated, and a very good food safety certification quality system that we have in place. So there is acceptability for these products now post the plant audits, of course, that happen. So there is a good acceptability for these products within the Western markets also. We've exported to the Americas as well in the last financial year. So new markets and new geographies are opening up for us.
Who are your competitors in India? What is their size? And what are the margin triggers? Because again, like I said, this is a commodity. You buyers need this product daily, and you guys need to buy from your suppliers daily or on a very regular basis. So the ones who typically give you the best price is something that will win.
No, so what really happens is, the raw material input might be a commodity, but the products which we are manufacturing are more towards, we work very closely with our customers to get the plants approved, audited. And I mean, typically FMCG customer would have a lot of audits going on in the plant. So the barriers to entry for these kind of products would be very high, though the input raw material might be commoditized. Also, I mean, the audit time would take anywhere between 6 months to 12 months per se for any of the FMCG companies to do that.
So who would your competitors
Yeah.
be, and what are the margin triggers?
Our competitors would be Gujarat Ambuja Exports and Gulshan Polyols.
Okay, and what would your global competitors be, just to get a sense in terms of the kind of share that you probably have globally? Who are you competing with on a global scale?
Yeah, so as per the Frost & Sullivan industry study, it's a $70 billion global industry for the plant-based, maize-based specialty products that we make. And some of the larger names that exist and that have a play in this industry include the like of Cargill,
Got it.
Louis Dreyfus, Archer Daniel Midlands.
Okay. Any kind of M&A or expansion strategy that you would have on an inorganic basis within this space?
I think we are open to that, but as of now, we don't have any thing in place, But as and when the opportunity arises, we would definitely be open to that.
I may sound like a broken record out here, but margins, that's what I want to know. Because on a 1,000 crore top line, you're doing barely 100 crores of EBITDA. What is the kind of margin trigger that you have? Because when you're doing 2,000 crores, what should one pencil in?
So majority of the product, the expansion are all coming in on the derivative side, the second generation derivatives that we mentioned of. Some of the products are even going into pharmaceutical applications. So going ahead, because of this positioning, we do anticipate margin improvements, EBITDA
How
expansions.
much? 200 basis points, 300 basis points?
Hopefully, because the company has also made some recent investments on renewables, on solar as well as biogas based electricity. So those are all, and plus along with the capacities of scale that we are going to achieve at 1750 tons per day, my Dhule plant is going to be probably the single largest plant in India outside China. So, so all these levers are going to aid towards capacity, EBITDA expansion going
Just
ahead.
to understand that point better on margins, what are your global peers' margins in the same business? If you could give us a comparable rate in terms of what the peak is, what the low is, and where you are.
So on an industry level, the EBITDA would range between 10 to 15, 16%. So this would be a broad range.
All right. And last year on the EBITDA of 100 crores, your cash flow from operations was just about under 30 crores. How is that ratio likely to be going forward?
So, I mean, we made some investment in the renewables. You know, if you see the debt on the company, it is really, really small, the long-term debt. On a revenues of approximately 1,200 crore rupees, we have a long-term debt of only 35 crore rupees. So, a lot of internal cash has been generated to invest into the expansions which we are doing.
But that would be cash flow from investments or cash flow from financing. I just wanted to understand about the CFO point.
Right.
But running out of time, we will continue this conversation, maybe press you for a lot more numbers when you guys list. So that's the management that we have of Sanstar. The IPO has been subscribed, guiding for near doubling of revenue over the next couple of years with improvement in margins as well as they focus on expanding their capacity from the IPO proceeds that they have. Take a short break, come back, talk about a lot of the other stocks which are moving down the trade.